Hello everyone, welcome to QuantSap. Myself Vignesh. So first of all, thanks everyone. Thanks for your valuable time. Thanks for joining me in this video. So this video is yet again for a beginner, I would say. First of all, we'll understand what is a debit spread, what is a credit spread, and based on that, first of all, we will decide a view on Nifty. Okay, what is the what possible move we can expect in Nifty for this upcoming expiry of 5th September, and based on that whether we are going to deploy a bullish strategy, a bearish strategy, a debit spread or a credit spread. Okay, first let me explain you what are spreads. Okay, give me a second. Okay, fine. So before starting with this spread, if you are new to QuantSap and if you haven't installed the application, I would request you to install the application at the earliest, because as soon as you install, you will be getting access to 25 free tools immediately. You can definitely use those 25 free tools, which will definitely help you in your trading journey. Apart from that, if you want to know more about the paid version, the paid tools, what you can do is, I have given you the video library link in the description. You can click on that link, or else if you have logged into the application, just go to learn section, go to video library. So what is video library? This is basically the banks of videos. So video library has almost all the tools of QuantSap. Okay, so we have covered all the tools, and that too in multiple languages. Just filter it out in language. English, Hindi, Marathi and Tamil are the 4 languages that we have covered. So you can definitely go and explore these videos, and while exploring the videos, if you have any sort of queries, what you can do is you can immediately contact us on the helpline number mentioned above. So we will immediately clear all your doubts, or else what you can do is just go to the profile and go to the support, and you can also mail us at support@quantsap.com. Okay, so let us start. Okay, give me a second. Okay, so first let me, what is debit and credit spreads? First we'll understand spreads. Okay, so say for example this is debit spread, and here let's talk about credit spread. Okay, so whenever talking about debit spread, if you are bullish, what we usually do is, that is a plain bull call spread. Now, what is a bull call spread? What we do in bull call spread, if you want a detailed video or if you want to know more about these spreads, then I'll show you how you can learn more about these spreads. Okay, and say for example, if you are bearish, we go with a bear put spread. Okay, if you are bullish, we go with a bull call spread. If you are bearish, we go with a bear put spread. And in case of credit spreads, if you are bullish, instead of a bull call, we go with a bull put. And if you are bearish, instead of going with a bear put, we go with a bear call. Okay, I hope this might be clear. Now let me tell you why we do so. Say for example, if you are going with debit spread, what does that mean? We usually buy ATM and we sell OTM, correct? We buy ATM and we sell OTM. So in that case, we are paying more premium to the market instead of receiving more premium from the market, correct? So in that case, if the market stays sideways for a longer period of time, there is a possibility that you won't make enough money. But when it comes to credit spreads, we buy ATM and we sell ITM. Okay, so in that case, there is a possibility that you will end up making more money as compared to debit spread. So usually, say if there are 15 days or less, okay, less than 15 days, or say if you are at the final week of the expiry, okay, say the monthly expiry is nearby, okay, usually for weekly expiries, we go with credit spreads because the span of period is very short. And if you are trading monthly expiries in stock and if you are in the last week, we usually prefer going with credit spreads because of the this thing, the you can say the fast erosion of premium because of theta. Because when it comes to credit spreads, we sell ITM, so usually the premium we are receiving more from the market. Okay, so that theta effect is negated when you go with credit spread. But in case of debit spread, there is a possibility that you might get trapped if you are going with a debit spread. No doubt, both are hedged, there is no problem with it. But if you are fag end towards the expiry, if you are standing towards the expiry, it is always preferred because of that theta effect that you go with the credit spread. So if you want to know more and in depth about what is a bull call spread, what is a bull put spread and or, what you can do is just get into the homepage of CoinSap, go to learn, go to classroom. See, here you can get all the options, strategies. Okay, you can definitely go and read this. These are absolutely free. You can definitely go and read everything, all the strategies from here. Okay, so I hope this might be clear to you. Now let us start with it. Okay, let us start with the say analysis of Nifty. What will be the prediction for tomorrow? Instead of tomorrow, what I'll say is today is 2nd and we are having an expiry on 5th. So let's plan a strategy for 5th September, like how we can plan a strategy. Okay, so first let me go to track, let me go to Buildup Script. So what is Buildup Script? I hope in most of my videos I have covered what is long unwinding, what is short and what is short covering. So that might be clear to everyone, but still let me explain it in a crisp manner. So whenever I say a particular sector or a particular stock is following a long build up, that means the price and open interest both are going up. If the price and open interest both are moving up, that means we say that particular stock or sector is having a long build up. What is long unwinding? Long unwinding is, you can say, profit booking. Okay, so in long unwinding, usually price and open interest both drops down. Okay, and when it comes to short, more and more people are expecting the price to go down. Okay, your view is bearish, so fresh short positions are created. So when fresh short positions, fresh sell orders are being placed, the price is bound to go down and fresh contracts are being opened, so open interest is bound to go up. So in short, price will go down and open interest will go up. What is short covering? Short covering is basically, you can say, if you are expecting a particular stock to go from say 200 to 150, that is not going to happen overnight, correct? So from 200 the price will come to 180 and then again it might retrace on the upside till 185. So that retracement, slight retracements on the upside, we can call it as short covering. So in short covering, the price slightly goes up and open interest falls because the fresh short contracts that were initiated are being closed. Okay, so I hope this is clear. Now what you can do is just go to cycles and check out Nifty. Now if you see in Nifty, check. If you see overall, in between I can see continuously long, but then if you see short, long, short covering, short covering, short. So Nifty is okay, fine, I would say, but it is not looking that bullish to me. Okay, based on the last 1, 2, 3, 4, 5 days data, it is short, long, short covering, and again I would say today it was short built up was there in Nifty, correct? So currently, yes, Nifty is, you can say, either it is looking moderately bullish, you can say, or you can say it is neutral based on the cycles. Now what can give you an exact direction? Okay, see, based on cycles I am unable to conclude whether it is bullish or bearish. Okay, now if you ask me about Banknifty, here I can clearly see that Banknifty was short. See, short, short, long, short, short covering, short, short covering, short, short covering, short, short covering. Clearly I can see Banknifty is having a bearish cycle till here, and then you can say slightly it changed. Okay, but in Nifty I am not able to decode, I am not able to get a clear view. So what I would prefer doing is I will go to track. Under options OI there is open interest, correct? So let's get into the open interest part. Now if you see, let us plan for the 5th September, correct? Now see the current price, okay, the fair price is 25,265. Now most of the people might be having a doubt about what is fair price. Okay, we know what is future, we know what is options, but what is fair price? So what is the immediate underlying for an option? That is futures, correct? But options, for options we have a weekly expiry, but do we have a weekly expiry for futures? The answer is no, we don't have any weekly expiry for futures, correct? So if futures had a weekly expiry, what would have been the price? The answer is this. So this is a synthetic future, you can say. Fair prices, you can say a synthetic future, because we need this, because for options the immediate underlying are futures, correct? So this is a synthetic future, you can say. Suppose Nifty had a weekly expiry for futures, this would have been the price of the future. Okay, so now I can see it is 25 to 65 odd level something. Okay, and I can see a strong resistance at 25,300, and I can also see here 25,200, I think. Okay, see at 25,200 I can see put writers are unwinding their position. So this is a, I would say, not a good sign as such, and but nothing to worry about it. We can see a strong support at 25,000. If you can see, there is a strong support at 25,000 for Nifty, correct? So I am expecting this to be broken 25,200, as I can see a strong unwinding over here. Not a strong unwinding, but a decent unwinding we can see, and a strong support is at 25,000. But as of now, we can see a strong resistance at this level, that is 25,000, correct? Sorry, 25,300. So 25,300 is acting as a resistance, I would say. Let us get into the chart and let us analyze what exactly the picture is looking like. Let me plot a 1 hour time frame chart. Okay, fine. Now let me plot RSI. Okay, so if I see, let me get into the daily chart. Okay, so if you see, RSI on the daily time frame chart is somewhere near to its resistance. Can you see? See, RSI always reverses from this level, correct? More or less you can say. So RSI is also at a resistance level as per daily time frame. As per 1 hour time frame, if I say, RSI is taking support. So say for example, if RSI goes below 55, 56, because RSI is again and again taking support at 55 odd levels at 1 hour time frame. So if RSI breaks this, we can easily expect it to come till 40 levels, correct? And also the open interest was suggesting me a downside, correct? So what I can do is, you can keep an immediate swing high as say 25,420, okay, or 25,450, okay, for to be on a safer side, 25,450 odd levels you can keep it as a stop loss, and we can plan a bearish trade on Nifty. Now how to plan a bearish trade? Say I am very much near to the expiry, only 2 days are left for the expiry. Today is 2nd, 3rd, 4th, only 2 days are left for the expiry. On 5th we have a weekly expiry of Nifty. Let me go to the options architect. So what I told you, whenever we are left with less than 15 days for expiry, it is always advisable to go with credit spread. So if you are bearish and you want to plan a credit spread, what is the strategy? That is a bear call spread, correct? So in bear call spread, what I will do, let me buy a call, a ATM call I will buy, and I will go and sell ITM call. That is, which call I will sell, where I am expecting the market, I am expecting that the market will hold 25,000 levels, because at that level I can see a strong support, correct? So at 25,000 call I will sell. See, this is the bear call spread, can you see? And 3 days are left for the expiry, if you can see. So I am willing to hold this position till the expiry. Now if you see, this is how the payoff will look like. 1700 to lose, okay, if the market doesn't go in your favor. Say for example, there is a strong upside, whatever may be the upside move, still you will end up losing 1700 on the upside, and the maximum amount that you will be making is 4400, okay, approximately. So the risk reward is extremely good, okay. It is 1:2. The risk is hardly 1 and reward it is more than 1:2. If the market falls, you will make money and your break even is 25,150. If the market say stays below 25,150 or say 25,150, you will end up making money, and you need at least the market to touch 25,150 or less than that to make money, okay. If the market stays above 25,200, 250, then you will end up losing approximately 1700. So I hope you understood this strategy. So on what basis I decided the levels? Based on open interest I decided the levels, what will be the decent levels for Nifty based on open interest. And then what I did, what we did is actually how many days are left for the expiry. Okay, so looking at the current scenario, only 2 to 3 days are left for the expiry, so it is always better to go with the credit spread. So based on a credit spread, bear call spread I deployed, I took this strike, and this is how the payoff looks like. So I hope you understood this video. Okay, a plain simple strategy for the beginners. Okay, so I hope you loved this. If you like this video, kindly subscribe the channel, share, comment. Okay, so stay tuned with us. We will keep on posting such informative videos. If you have any specific requirement, you can also let us know in the comment section. Okay, so thanks everyone. Thanks for your valuable time.